Hello, and welcome, willkommen. I like how everybody's in the back seats, guys. This is not class. You can come to the front seats and stuff. You know, I'm not gonna quiz you and be like, you in the front, Luke. What is the answer to crypto, huh? What is the coin we learned about last time, Luke? Did you do your homework? Okay. All right. Okay. Welcome, everyone, to our little weekly powwow, little party we have here where we talk about crypto and do fun stuff and hopefully make some money along the way. Hopefully not lose some money along the way. Right? That's one of the most important things to remember in crypto and in life. Just if you can learn how not to lose money, that's it. You won the game. Because if you just don't lose money over time, guess what's going to happen to your money? It's going to grow. Right? The thing is, we're taught to think about it in a way that doesn't really align with how the world works today. Our parents' generation and our grandparents' generation, they lived in a different world, right? So the way they thought about money, the way they thought about revenue streams, the way they thought about investments was completely different. And in that landscape, those kind of investment strategies worked. In the landscape we have today, things have changed completely. So let's just, what we're going to talk about today is revenue streams. You know, I get this question constantly. I talk about them. People go, yeah, but what's a revenue stream? How do I hook it up? How do I make it work? You know, because as far as we're taught, you know, our revenue stream is our job. So I go do a job and I get paid money for it. And I spend all my time on doing this job and I dedicate myself and I have this one revenue stream where I make money, right? But in today's world, there's 1,000 different ways to make money that don't require your time, right? So that's what we're going to discuss today, revenue streams and how to think about them, how to conceptualize them, how to build them, how to lay them out, how to have risk analysis, all this kind of stuff. But before we get to that, let's always just start from the idea of like, what is value, right? And I will hammer this point home for the rest of my life and every single talk that I do is what is value? Value is the idea that we improve somebody's life, right? That's all the world wants. The world wants you to come up with ways to improve somebody's life. And if you can do that, the world will pay you because you add value to somebody's life. So somebody pays you in a form of value called money, right? So we always have to think from that perspective. So when it comes to like, you know, investing in crypto, we think from that perspective in terms of, you know, I only want to invest in cryptos, which I know are going to add a lot of value to the world over the long term. And because of that, even if you know I have to hold them through a bear market, I know on the other side they will add a lot of value. Therefore, they will be valuable to the world. Therefore, I want to hold them, right? But the other way of thinking about value is like, if I tell you, I'll give you $1 billion, but I will take 24 hours of your day from you, would you trade them? Would you trade them? Raise your hands if you would trade $1 billion for me taking every single second from you of your life, and you don't get to do anything. 24 hours a day, every single day for the rest of your life. No, I'll pay you $1 billion, but your life belongs to me now. I can pay you $24 for like 24 hours. It's okay. If you want. I mean, I'll go make a good trade. I could use a guy for 24 hours. Right? I'll give you some Luna. I'll give you $1 million Luna. Don't press that button. It's a sensitive sort of topic. It hurts. It hurts. You're cutting too deep and it's too early. Okay? So it's like, okay, so is the money the value? Not really, because I'm not going to trade my life for it. Right? So at some point, you do value your time. You do, so then it's like, what's the value of hanging out with your family compared to making more money? For me, that's huge. Like spending time with people I love, in places I love, eating food I love, and doing things I love, we love, is the most valuable thing that has ever existed. So money is just a function to make that happen. And if I have to trade one for the other, I'll always take the first one. You know, the money is a function, it is a servant, not the master of that whole process, right? You got a chair back there? Yeah. Nice. Yeah. So then value is more than just money, right? Yeah. The way the value exchange happens in the world is, yeah, you add value to somebody's life, and that person's willing to pay you in a form of value called money, or you add value to your loved one's life, and they pay you in the form called hugs, and love, and kisses, and time, and fun, and joy, and lifestyle, right? So it's like, what is your idea of value and how much of it do you want, right? Then you have to think, okay, the way I add value to, the way most of us are taught to add value by our parents into the world is you get a job that is valuable to the world, and you stay on that job and you do that job for all of your time, and then that's the value that the world gives back to you. And the world that we're living in, it was like, get a job and hold that job. Stay on that job. Like, don't ever leave this job, because this job is if you lose this job, you lose the only place where you make money from, right? So then we come along and we're like, oh, but I want to make money in other ways. So we go, you know what? This thing goes up sometimes. This thing goes up sometimes. So I'm going to put some money in here because I want to make some money, but while I'm not working, right? And what usually ends up happening is you end up buying it here, and you ride it from here to here for like a year, while you were supposed to be getting revenue from it, but you're not. And then you get angry and annoyed, and you're like, fuck this place. I bought it for $14,000. It's at $3,500. I just want my money back. I'm going to go back to my job. Like, this is stupid. And then you exit here, and then the thing runs up from $3,500 to $70,000, $65,000 while you're busy working. And by the time you hear about it, you buy it up here again because you're like, oh, people are getting rich. I'd like to have a revenue stream. And then the thing doesn't become a revenue stream. It just becomes a headache that just goes sideways for some period of time. So this is not a revenue stream. This is an asset investment, right? So before I go into the depths of all this stuff, just let's stay on that point of what is value, right? For me, like, time is value, love is value, experiences is value, quality of life is value, good food, good people, good places. Those are the things that are value to me, right? And the goal of everything I do is to get me more of that, right? So we all want to work and do what we do to get rich and get to the point where you have the ability to do all of these things that I just listed. But you know, I think there's a misconception of like wealth and rich, right? There's a great quote. It says, rich is when you make money. Wealth is when you make money in your sleep, right? Wealth is when you are making money when you're not doing anything. It doesn't take your time to do it. And that is one of the seminal pieces of thinking about revenue, or the way that I think about revenue streams is I want stuff that makes money while I'm not there. And it doesn't take up my time, it doesn't take up my attention, it doesn't take up my energy. So I can focus on the things that I love to do, because that's what's real value to me, right? So if you think about it right now, how many things do you have that make you money while you sleep? Right? Most of us are losing money while we sleep. And that's why people will actually reduce the amount that they sleep so that they can make more money. But it's like you reduce the amount that you sleep, and then you will have a lower quality of life, and you'll be angrier at your spouse, and you'll ruin your own relationships, but you'll be working harder to make more money. Like, that's just not an exchange that makes sense to me, right? So, and then there's another quote. It says, sometimes more money is just too expensive. Sometimes more money is just too expensive, right? It's a great way of thinking about it. Like, if you know, I have to know to what limit I'm willing to dedicate my time and energy to make money, and beyond that, I'm not trading my time and energy and time with my loved ones for money, right? So, in this crypto market, there are times when you want to be like all in on the crypto market, right? And I'm not saying you should or shouldn't. If you lose all your money doing this, that's a you problem. This is not financial advice. But there are times when you want to be all in on the crypto market, or as much as you can be. Like here, you know, like in this region. I don't care if you bought it at 3,000, 6,000, 14,000, nobody cares. But in this region, while everybody's angry at it, everybody hates it, everybody thinks it's shit, everybody thinks it's going to zero, that's the moment when you go, okay, now I think I'm going to buy it off of all these people who don't know what this technology is and what the real value is, and that's when you want to be all in crypto. On the way up, you want to be taking profits, all right? And when you're on the way up, you're going to see your portfolio going up, and I'm going to go sell it, take some profits, and you're going to go, but if I sell it, I'll make less money. You go, no, you haven't made any money until you sell it, right? So along the way, you should be taking profits. Around here is when you should be building revenue streams. Right? Because around here, everybody wants to get into crypto. Everybody came to get rich around here, right? By that time, you should have already drawn some money out, and it should already be working in places where it's making you money while you sleep in a more reliable way than crypto does, right? Because, you know, like for us, from here not even from here, technically like from here to here, we've been building revenue streams, and that's about since like September, right? Because there are times when you go, okay, well, I'm not going to take a massive risk on a market that's already peaked out, or the explosive period part of it's already done in some capacity. I'm going to focus on setting up. I'm going to take these profits and I'm going to set up businesses that are making me money, and they'll take 6 months to a year for that money to return. If you set it up with the right revenue streams, might take 2 years to return. Who knows? But the point is, I invest the profits I made somewhere where they're making me money in a reliable way, and if I can get that money back within about a year, then this whole market will crash within a year, and it'll come back down to these levels again. And at that point, I'll have money coming in from businesses. Plus, I'll be able to buy crypto at a cheaper price. Plus, I'll still have the businesses, right? So it's like there's a shift that needs to happen, and it's cyclical, where there are times when you're like, I'm taking all my capital and I'm deploying it in a market that I know is cheap. And I'll wait. I'll give it 6 months, maybe a year for it to go up. Once it's up, I'm taking my money out. I'm not worried about how much money I won't make. I'm just taking my money out of the market as much as I can. Leave some in the market, sure. And then this cash that's sitting on the sidelines, once you have enough data, like, it's done this for some period of time, then you can say, okay, I'm going to start building out businesses and revenue streams that are making me money with that money. So by the time we come back down again, I'll have money plus businesses, right? So then that second time, you will buy assets for cheaper than where you had it. You'll have enough revenue, some revenue coming in from businesses. Then the second cycle, you'll make more profits. You feed that into your revenue streams again. Now your revenue streams are making you more money. So now every time you run this cycle, like within about 4 years, you have more than enough money coming in from your revenue streams to cover your entire investment portfolio, right? So right now, we are, according to my approximations, at the end of this year's revenue stream generation cycle, right? Because I started building them from, we started building them from way down here, but we made many of them live from here to here, and we deployed all this capital that we'd made up to here into those revenue streams. We couldn't deploy all of it because there's a shit ton of money, but we deployed that capital into revenue streams, and now they're already starting to make money back. And by the time we have the next bull cycle, those things will be making a significant amount of money going forward. Okay? And we're going to look at all those and how to think about those. And if you want access to it, we can get you access to it. So that's when to focus on revenue streams, right? And the other thing to remember when it comes to revenue streams is you should have multiple revenue streams. Nobody in this room should have just one place you make money from. I will give you a bunch that are free, effectively, to do. If you have zero money, I'll show you like at least 3 that you can make money from today, okay? But you should have multiple ways to make money, because if your job goes down, if something happens, if crypto's not doing well, if the world is going the way that it has for the last 2 years, you actually have multiple streams that are making you money at the same time, right? So why can't I click that? All right, we're having some technical difficulties. One of the reasons why most people don't think about the world like this is because we don't think about our wealth in a visual way, right? So today we're going to go through the exercise of thinking about you as a mind map and figuring out what revenue streams are available to you, what your assets are, what your cash is, what your life looks like, and what your crypto assets are, and how all that ties together, and how you actually select the right things to do. Okay, while we're figuring this out, crypto has a bunch of revenue streams within crypto, right? Crypto has a ton of different ways you can make money within crypto. Then the world has an infinite number of revenue streams out there, right? So let's just go around the room. Can you guys name any ways to generate revenue within crypto? That's something I would do normally, so I appreciate you doing that. He's fine. He's got enough cushion. Is it working? I wish. All right. So let's go through that. Can anybody name any revenue streams that you know to be in crypto? By revenue stream, I mean I take my money and I do something to it, and the money reliably makes me some. It could be a varying range, but it reliably makes me some money back. Bank term deposits. Great. That's a traditional revenue stream. Yeah, like banks will give you 0. negative whatever percent. You know. Yeah, exactly. They'll give, or like the banks in Indonesia, they're like, yeah, put it into government bonds. We'll give you 5% or 7%, right? So that's a revenue stream. It's money that's sitting there, and it gets put to work, and you earn an interest off the top. Great. Bank deposits or bonds. That's a good way. That's one. Staking. Liquidity mining. Great. Staking is the idea that you put it somewhere and you lock it up, and for you locking it up there, they give you a return for it. Your liquidity mining is where you provide liquidity to a platform, and then because you're providing the liquidity, you get paid back interest on providing that liquidity. Great. That's 3 right there.
Actual mining in the server.
Great. Actual mining. You know, you can set up a computer and mine crypto, and then that's actively making you money. Hopefully it's beating the amount that's costing you to run it, but as long as it is, then you're making money there. Great. That's 4.
Renting out real estate.
Pardon?
Renting out real estate.
Great. Renting out real estate is a real world revenue stream. Now you're getting it. Everything is a revenue stream. Like every single thing we do out there is a revenue stream. Consulting is a revenue stream, whatever's, but let's think about just crypto itself, right? Like within crypto, staking, liquidity providing, mining, trading bots I don't count as a revenue stream. Trading bots is a great way of losing money consistently, right? Because the whole point is like a revenue stream isn't something that's, it's not like it's variable to the point where sometimes you lose money and sometimes you make money, and hopefully you end up breaking even enough that you make money. That's just trading, right? So that's a really, there's a fine distinction between those two. It's like, why isn't crypto a revenue stream? Well, if it was a revenue stream, everybody would be making a lot of money from it consistently. Crypto is actually a negative revenue stream for most people because they don't have a strategy of how to play with it, and they take on too much risk in the space and they don't understand what's going on. So for most people, it's not a revenue stream. For about 5% of the people who participate in this space, it's a massive revenue stream. They make all of our money, right? So trading in bots doesn't count as one of them. Okay, so let's go through this exercise. Can we jump up here? Right, let's see. Thank you. We're sharing a chair. Nice. Oh, here, see. Okay. There you go. All right, so we just named a few. Okay. Yeah, my bad. So we just named a few. Residential real estate. Okay. It's okay. So you can have rental real estate, residential, or you can have commercial real estate that's rented out, right? If you have that, you think like, okay, let's say I have a residential place and I bought it for $400,000 and I'm renting it out for $2,000 a month, right? So that means it's going to take me 200 months for me to actually break even, right? 200 months is how many years? 17 years. So it'll take me 17 years to break even. So my ROI of 100% is about 17 years, right? Not a great revenue stream. Not a very good revenue stream. But what our parents taught us, get rental real estate, rent it out. That's the way to make money, right? But in reality, in the world we live in, they just printed 40% of the money supply last year. So you just lost 40% purchasing power last year. And if you're making 1/17 of your portfolio or of your investment per year, you're losing out to inflation and you're not playing the game right. Commercial real estate. Great, I owned a bunch of places, they have a bunch of stores, they have a bunch of offices. It was going really well until one day something weird happened in March of 2020. I don't know what, maybe you guys can put your finger on it, that just shut down all of commercial real estate. And now instantly, the thing that was a revenue stream has become a liability to me. The land that I had that was supposed to run businesses that were supposed to be solid, disappeared like that. And now I'm left, my revenue stream has turned into a liability for me, right? So it was a good revenue stream, but in the world that's going forward, we don't need offices anymore. I don't have an office. None of us have an office. Like, why would we spend money on an office when we can travel the world and work from wherever we like, right? So, okay, that's another revenue stream, but not a very good one, okay? I'm just gonna put bonds under stocks. So when we say bonds, right? There's another one that our grandparents would have loved, because bonds used to return for them like 15, 16, 20%. Yeah, 20% returns per year, yeah. And it would be like, wow, that's amazing. That's why they were like, yeah, just save money and put it away. Put it in a bank. A bank will give you a high return, or put it into bonds and they'll give you a high return. You know, yeah, and today you're getting like single-digit percents. You know, number percent returns on it. Oh, okay, that's huge. Single-digit percent returns on it. So if you're telling me inflation is, according to their numbers, at 8%, realistically it's at about 15% across the world, plus monetary inflation is at like 40% a year. If I'm making single-digit percents, I'm basically losing out. I'm losing money by doing this. So not a very good revenue stream, right? A lot of people, they have retirement savings. And the best of them are making about 11% a year. And that's like the best of them. That's like a traditional financial advisor will be like, we crushed it this year, we made 11%, right? Again, if real inflation is at 15%, you're losing 4%, and you look like you're making 11%, and they're telling you you're doing great. Not very good. All right, well, let's say I just have a bunch of stocks, you know, just regular stocks. Dividend-paying stocks, you know, that actually yield a dividend. Those are good as long as you have a massive portfolio. Those are not the worst way of doing it. But even that, in today's world, you're not going to make some like serious amount of money in that process, right? Commodities, people love like gold and silver and stuff. How much money do those make you? Realistically, it's the same thing as investing in crypto. It's just less volatility, so you actually make less money in the process, right? Do you know of any commodities that make you money? No, that you can use, that you can participate in, that you can connect with? No, right? All right, crypto. What are some revenue streams within crypto? We said staking, yield farming, providing liquidity, mining. Right, so that's great. Any other ones anybody can think of within crypto? These are the most well-known ones. Let's just go with those, right? How much money does cash make you? Negative. It makes you negative 15% if you go by the inflation, and it makes you negative 40% if you go by the monetary inflation numbers. So cash actually makes you a negative return, right? So let's say cash. Negative return. Okay. All right, so this is the world that we come from. Okay, this is the general gist. I can't zoom out of it. Oh, that's not, that's true. I'm so used to my laptop. This is the world that we come from. All right. First of all, work your ass off every single day. Stay away from your family. Stay away from your loved ones. Stay away from the things that you love to do. In places which you hate anyway, and go do a job that you hate, so that you can take all of your money and you can put it into really expensive real estate that doesn't make you very much money. Wait, can we? Go into really expensive real estate that makes you barely any money. Take on a massive risk on commercial real estate if you can even afford it, which most of us can't. And then rent it out, hoping to God that the world doesn't shut down and businesses keep needing your money. And even then, businesses can barely break even, and you're getting money from there. Or put it into stuff that somebody else holds, and somebody else knows how to run better than you, and somebody else knows how to put it somewhere where they make the most amount of fees, so that in a good time they can give you 11% returns, and hand it over to people who are eventually going to end up stealing your money, and even then they're not making you enough to like make a big difference, or put it into stuff which you don't understand well enough, and you could make money in the process, or you could lose all of your money in the process, or keep it in the bank as cash, which is what our parents told us, right? Our parents said, save money and pile it up in a bank account. That was their idea of like, that's how you get rich. And like, unless you have rich parents, they didn't tell you anything otherwise. Rich parents don't tell their kids that. They don't go, save up a bunch of money, honey, like you will get rich. They go, take that money and invest it into the right business revenue streams and actually generate value for the world. And that's how you can actually prosper, right? What's going on? We're not going to use OBS again, guys. Let's just go back to good old screen time. Like that. Yeah. Okay, or they're like, you know what? A safe place to put it is gold, because like gold saves your wealth. And it's like, no, gold hasn't made you money for the last like 10 years. Yeah, gold saves wealth, but like if you're again, you're in that mindset of scarcity mindset of I just gotta hide, I gotta protect all the pennies I have, and I gotta skip coffees to make it happen. It's not the right mindset to have. Okay, so one of the reasons why we're stuck to these things is because this is what we were taught, right? And it's safe. It's really safe, because it's like, okay, if I get a house and nobody wants to rent it, I still have a house. I could live in it. I could just wait years and years and years, wait for the property values to come up, and I could sell it. And houses have always gone up. For the last like 40 years, 50 years, houses have always gone up, right? So logically speaking, they will go up, okay? Commercial real estate, come on, it's businesses. It's not like the whole world is gonna shut down one day. I mean, like, come on. You're crazy if you think the entire world is gonna shut down, all businesses are gonna shut down. So I think it was a safe bet at that time. Bonds, I mean, that's governments. Governments never default on their debt, right? Retirement, I'm gonna retire. When I give my money to somebody, I give it with the intent of knowing, hey, this person's gonna protect my money. And I rely on it to retire because, that's what I think. I think retirement is actually gonna happen. I invested into stocks, and man, stocks have only gone up. For the last 14 years, stocks have only gone up. Yeah, in 2008, we had that little thing, but like after that, they've only gone up forever, right? So why wouldn't I just buy stocks? They're safe places to be. Oh, crypto, like I think I understand crypto well enough. Oh, look, they came up with a new thing where it's like, I can provide liquidity pairs. I can tie one cryptocurrency to another cryptocurrency, and I can attach it together, and I can give it to somebody, and they use it to run the system, and they pay me fees for it. And look, the system seems to be working really well. Right? Or yield farming. Look, I'm going to take my stable coins and I'm going to put them onto a protocol called Anchor Protocol. It's new, it gives me 20%. This is fantastic. I'm making 20% passive income. Why wouldn't I do that, right? All of this stuff. But what we're not doing in that process is a risk analysis to go, okay, I can get this house, right? If I buy this house, it's $400,000. Which is like a cheap house in a good area, right? Okay, so then how much, what happened to my money? I am now minus $400,000 in my earnings. My revenue is now down, or my assets, my entire balance sheet is down $400,000. And then when I rent it out, it'll make me $2,000 a month. So it'll take me 17 years to even break even, and then beyond that, I'll make money. But maybe the house prices will go up and it'll cover me for that difference, right? The risk you're not taking into consideration is like, okay, well, what's actually happening to the money in the background? If I just took a $400,000 bet today on a house, and I'm expecting somebody to keep paying me $2,000 a month, what happens if that person can't pay me $2,000 a month, right? When you rent houses, you realize really quickly how stressful it is to rent houses. So then you're not calculating how much time, how much energy, how much of my mental capacity is it going to take me to run this rental place for $2,000 a month? Is it worth it? Nobody thinks about it like that, right? Because our parents are like, buy a house, trust me, buy a house, buy it on debt, right? You also don't think like, do property values always go up? Just because they've gone up for the last 40 years doesn't mean they always go up. Because if you look at the years before that, they were down. They went down a lot. A lot of people lost a lot of wealth. We have recency bias, so we never do the analysis looking that far back. Commercial real estate, and until very recently, you literally couldn't convince people that commercial real estate wasn't going to be that good of a business. But if you could see the world shifting towards this new way of working, it's remote work stuff, right? So technically speaking, you could, guys, please, I have ADD, please. I constantly want to listen to your conversation when you're having. I'm like, what are they talking about? It's like, what were we talking about? Commercial real estate, right? So commercial real estate, you don't do the risk analysis to understand. Okay, first of all, let me try to buy a commercial real estate. Okay, this building is $1 million, $5 million, $10 million. One guy has to come in and buy a $10 million property and take a $10 million risk, hoping that within 5, 6, 7, 10 years, the property values will go up and the person will be able to sell it, or they keep being able to rent it, right? Without doing that, and even when you rent it, you run the numbers, you don't make that money back on the rentals. The rentals are just barely paying for the bills until the property value goes up and you offload it to somebody else. But all that is a sucker's game. It's like, I buy something, I wait for it to go up, and I hand it to somebody else, I take the money and I leave. And now that sucker has to hold and hope that it keeps going up further. And eventually somebody's left holding, it's like holding shit coins. You're holding like shit real estate. And that's what people are experiencing right now. And we're all like, no, I think the real estate's gonna come back. No, it's not. It's not, because the real estate's worth something today. If the property values are gonna drop now when this kind of bubble collapses, then the property values are gonna come back up. But they're gonna come back up in confluence with them printing infinite amounts of dollars to try to save the world. So your property values might be going up, 10, 15%, but they just printed 40% of the money supply. So you lost 25%. Okay, give it a few years, like by 2030, I think like $100,000 will buy about $10,000 worth of stuff, according to the metrics that we're looking at for hyperinflation of currency. So unless your real estate is going to become 10 times more valuable within the next 10 years, you're going to lose money on real estate. But you don't do that cost benefit analysis because we're all talking about safety, right? We're taught to be safe. Our parents are like, be safe, get a job. Not even get a job, go to school, get a degree on top of a degree, get a giant amount of debt in student loans, and then go get a job and be safe, and then put it into safe assets where we've trusted these people for a long time, and then put it into a bank because it's very safe, right? But in reality, the bank is going to do a bank bail-in. This is about to fall off of a cliff by 2023, and you're going to see the destruction of wealth like we've never seen before. This is already dying. It's dying all around you, but it's about to fall off of another cliff. So all the things that our parents have considered safe are risky as hell. There's an enormous amount of risk that's built into those things because that game is at the end. This comes with its own levels of risk, which you don't understand. Okay, so I gave a pair of $1, an XYZ coin, to a platform to trade for liquidity. If you do not understand impermanent loss, which I barely understand impermanent loss, all I know is it has the word loss in its name, the name is gonna come true and you're gonna lose all your money. This is standard protocol. When things are well, you giving money for things to function is great, but the moment the bell rings and everybody rushes for the door, your liquidity gets dried out and you lose all of your money here. Okay, so good times, okay, it's a good revenue stream. Bad times, no. Mining, it's fantastic as long as the hardware risk that you're taking on setting up the hardware itself and the cost that you're taking is for a platform which is going to pay that back, right? And right now, like Bitcoin mining is almost unprofitable completely. ETH mining is about to disappear. There's a lot of dynamics that you have to understand as far as the risks you're taking when you're setting up the revenue stream. But okay, I'll give you that. This is a pretty solid revenue stream. Staking. Who here knew the word staking 2 years ago? Was there even staking 2 years ago? No. Like most people don't even know what staking is. So we're saying, okay, but we're going to take money, we're going to take cash, and we're going to put it inside of a protocol. Like we're going to put it onto Luna, we're going to convert it to Luna, then we're going to convert it into UST on the blockchain, then we're going to lock it inside of a protocol, stake it, so that they give me 20%. But then you think like, but wait, what if everybody runs for the door at the same time? Then I have to go from my protocol into UST, which happens on the blockchain, and if the blockchain is congested, it won't happen, or it'll take a long time. And then I have to go from UST to Luna, and I have to hope to God Luna's price isn't dumping at that point. And then I have to exit back to dollars. So I've entered into 3 stages of protocols to make this money. So the risk I'm taking is a 3-stage risk, okay? Yield farming, same thing. I'm giving it to some other lender, and the lender is going to lend it out to somebody, and they're going to give me a return for it. But that depends on the lender not going bankrupt. And when times are good, everybody's good, and when times are bad, most of the companies that we're working with in crypto die. Okay, so
the trading could be involved with crypto, I guess, as a revenue stream.
Crypto trading?
Yeah.
No, crypto trading is not a revenue stream.
Is it fair to say that they're all Ponzi schemes because then it's all good when it's good, but they might just fix it?
You know, the biggest Ponzi scheme on this whole chart, the biggest Ponzi scheme is right here. The biggest Ponzi scheme is, hey, you spend your entire life doing stuff I want for me, and I'll give you this paper stuff that literally grows on trees. And when I need it, I'll just go to my friends at the central banks and the banks, and they'll just type it into a number and they'll hand it to me, right? And yet we work for it. The biggest Ponzi scheme is the dollar. The biggest Ponzi scheme is the fact that the dollar has $150 trillion to pay back $300 trillion of debt. That's exactly how a Ponzi scheme works, right? So that whole Ponzi scheme is that's what we're talking about. When we're saying they're hyperinflating the dollar, this Ponzi scheme is coming to an end. And the way that Ponzi scheme comes to an end is, I have $150 trillion, but I got to pay $300 trillion of debt. How do I do it? I just print more dollars, right? I print twice as many dollars, now I have $300 trillion to pay back. Well, I still need money to run the world. Okay, let's print $1.5 quadrillion, 10 times as much as, or 5 times as much as we need, and then we can take that and pay back the debt, which is in dollars, right? But by that time, the dollar becomes worthless. So the number of dollars doesn't matter. The debt stays a number of dollars, but the actual value that's being transacted dies. And this Ponzi scheme is linked to this Ponzi scheme, is linked to this Ponzi scheme, and this Ponzi scheme is linked to this Ponzi scheme, and this Ponzi scheme is linked to all these Ponzi schemes. So life is one big Ponzi scheme. You pick your schemes, you know. There are Ponzi schemes that add value. Like this Ponzi scheme puts roofs over people's heads. So that's not really a Ponzi scheme. That's just a market working up and down. But it puts roofs over people's heads. This one allows people to actually go to work. This one allows people to be able to invest for longer periods of time and give money to companies so companies can change the world. This one has built the entire world. One of the most successful schemes that's ever happened in history was from 1944 until now, where that thing came out, and it changed the world 100% across the board. It created magic in the world. Literally everything we do is like, it's magic from like 50 years ago, right? Okay, problems. Problems, right? In that process, so then what do you do right? What can we do right about this? You have to understand, you have to do a risk analysis that's updated with all this stuff, right? So you have to think like, whatever money I have in here, is it a cost to me? Like what a lot of people do is they buy property to live in, and they think that's an asset. No, that's a liability. You're living inside of a place that's costing you money. So that's a liability. But you look at this tranche and you go, okay, is there any way for me to make money here? Right? So what some people do is they go, no, not rental, Airbnb. Right? That's why the world is being taken over by Airbnb, because Airbnb charges way more. So the revenue coming in from this through Airbnb goes through the roof when you switch it to Airbnb. Therefore, people switch it to Airbnb. You know, then it becomes a pretty viable revenue stream for some people. With this, that's dead. Real world businesses are dead. If you're an owner of a real world business, I'm really sorry to report. The last 2 years was just a prelude, but the world is shifting to completely digital, and I mean completely digital as in like experiences and restaurants and places and museums and all the physical things that we inhabit are going to become that much harder to work with. So this one's already dead. This one has created insane amounts of wealth. Insane amounts of wealth. For the last like 70 years, if you just held on to stocks and you rode through all the bullshit, for most of those periods, you were making a ton of money. There were like 10-year periods where you weren't. From like 2001 to like 2011, you weren't making any money. You crash happened and then it came back. But you know, you were making a lot of money in that space. And our parents, they were able to retire off of these things. So in their world, this was a great place to be. In our world, this is coming to an end. Like the World Economic Forum themselves are saying we're switching from shareholder capitalism to stakeholder capitalism, which is going to shift the way that this investment landscape works. Plus, this average person hasn't even been able to participate in this. You have to be an accredited investor worth over $1 million to have access to a lot of these investments here. Plus, you pay a ton of taxes on this stuff. So, an updated risk analysis of all this stuff is like, for me, no property. Not even the one that I live in. The one I live in, rent. Because I will wait for the crash to happen and everything to go on fire sale before I buy property, right? Prices to reset. Commercial, I don't even enter commercial real estate stuff. Stocks, the returns just aren't big enough for me, and I'm definitely not planning on retiring from my portfolio like this. I'm planning on retiring over here by growing this out into a giant web, right? But forget about this. If you have stuff in retirement, you are about to get destroyed. You're about to have a crypto moment in your retirement savings. The same way, anybody who's holding Netflix or Facebook or Amazon or Tesla, all these stocks that were like crushing it, how's it been the last 6 months? Get ready for the same thing to happen to your retirement, because the retirees are the first on the chopping block when it comes to this stuff happening. So what's actually happening right now is there's a wealth transfer going on. There's a wealth transfer going on from people who are here and here to people who are here and here. Okay? And it's happening live in front of you. Some kid who literally just clicked a button to start mining Bitcoin back in 2010 is now a billionaire, while the guy who owns $1 billion commercial real estate is going bankrupt, live in front of you. Retirees who thought they were saving a bunch of money are losing money to dollars being printed, while the printing of dollars is flooding into this new space and pumping it up to astronomical prices, which we've never even imagined. But do you understand where the money's coming from? It's coming from these older spaces and is naturally bleeding over into these spaces. Even gold's money is starting to flow down to crypto, right? And that's because this is not just currencies. This is a new way of doing this. It's a new way of doing this. It's a new way of doing this. It's a new way of doing this. And it's a new way of doing this. And we think about it as just a new way of doing this. Right? We think cryptocurrency. It's such a misnomer. Like, these things are done on purpose. We go cryptocurrency. So currency, like money. So all it does is it's transactional. No, it's actually the basis of this technology is called blockchain. And blockchain allows you to be able to do everything here, everything here, everything there, and everything there on this technology itself. Okay, so let's look at that. Let's look at how that works. Actually, let's do this exercise. I'll show you my revenue streams. Yes. Is it possible to do from a second laptop? Right? So next, yeah, let's set it up so there's a management laptop and then this one. Okay, so this is. Yeah, we're getting there. Step by step. So I consult for crypto, helping people get into crypto and building strategies, right? That naturally led into building tax strategies for people, which naturally led into setting up companies to facilitate these functionalities that we're talking about, okay? And along the way, people are like, hey, can you help manage my portfolio? So we go, okay, great, we'll manage your portfolio. It's not even management, portfolio assistance. Right? What else are we doing? And then we were like, you know what? This tranche of revenue streams is very interesting. So we're like, okay, let's set up some nodes, which is effectively mining, but just a different way of doing it. It's staking on nodes. Okay. And then we're like, you know what? I think it's this whole play to earn model is a new way of earning money in the crypto space. So our friends are actually helping people earn through play and earn. Play to earn, right? These are games that you play. And then we're like, you know what? Commodities is nice to invest into, and stocks are nice to invest into, and property is nice to invest into, and DeFi is nice to invest into. So what we did is we're creating a product. It's called Mining Token. And it takes revenues from mines that are pulling out commodities, turns it into a security like a stock, and then pays out dividends like a DeFi product, right? Then the government reached out to us and they're like, hey, do you guys know any people with money who would want to invest into things? So we're like, sure, give us government tenders. Right, so government tenders are where the government has contracts to give, and they need private industry to fill it, so we help them fill it, right? Along the way, people are like, can I do like ongoing teaching with you? So I started teaching them crypto. There you go. Am I missing anything? Whatever. So the point is, this is my business right here.
Setting up a crypto strategy?
Yeah, that's like right here. That's the strategies and also. This is my business, right? So when you draw this for yourself, you would draw a revenue stream which says your business. It would have just your business. That's one thing, right? But from my business, I can see, hey, my business is providing value to people's lives, and people need more value added. People need more value added. You know, they don't just need consulting on how to get in and out of crypto. They need to know what to do with their money and how to protect it from taxes. So when I started building that, people were like, that's amazing. Nobody's doing this with crypto. Fantastic. I found a need and I started servicing it. Then to do tax strategies, we were like, hey, Indonesia has great tax laws. We need to set up companies. So I was like, great. It was a natural progression, natural branch off of what I was doing. And it was synergistic with what I'm doing. So then that was another thing people needed. So I started doing that. From this, people were like, yeah, I really need help managing it. So it was a natural progression for us to go to this, to portfolio assistance, right? And it started helping people do that. Then the people have made their money and all of this stuff. They're like, what do we do with the money? Where should we put it? I was like, well, definitely don't put it back into here, into the riskiest space. Take that money, like we discussed, and put it into these other revenue streams where you can actually make money, right? So these are my passive revenue streams. These are my active revenue streams. And I have others too, I forgot to put them on there, but like, you need to think about your life like that. You know, it's like think about this, like, okay, I'm a writer. I'll give you a real example. Like I was sitting there working at Fins, and some guys walked up and they're like, hey, what do you do? I was like, I do like consulting for crypto and do like wealth planning for crypto and stuff. And they're like, that's cool. Like, we are lead generators for financial advisors, so it sounded interesting that you're doing this. Right? And I was like, great. Like, why don't you guys do it for crypto? Like, we haven't thought about that. But that's interesting because people have asked us about crypto. We just never moved towards that direction. And then when they thought about it, they're like, well, it's just a natural fit for us to do this for people in crypto. People in crypto almost need it more than the traditional financial world, and there's more people looking to get into crypto. So for them, they had just one revenue stream that was lead generation for financial advisors in the traditional space, and they could easily branch it off into a second revenue stream that's lead generation for not financial advisors within crypto, right? Or people who want to get into crypto. Think about your life like that. If you're a writer, you're like, well, I write. Great. Did you know that there's ghostwriting, where you can ghostwrite people's books? That's a revenue stream. Did you know you can like write social media stuff for people? Did you know there's a million different versions of writing that you can do at the same time, still writing, but you can leverage that to a certain level. Okay, I know writers who they started off as writers, then they figured out how to write books, then they figured out how to write ghostwrite books, then they figured out how to growth hack them on Amazon, and then they started offering services where they help you write a book and growth hack it on Amazon. Right? So it's the person not thinking like, I'm going to do one thing. They think like, I'm going to do 2, 3, 4 things in the same passionate line that I'm in, that I like. Right? So those are your active revenue streams. But the key with a lot of this stuff is your analysis has to first of all take the same risk metrics into consideration, but it also has to take into consideration your time. Right? Because if I give you one of these, and like when this was taking up all my time, I couldn't do all this other stuff. So then I had to do this, get it to a point and automate it and turn it into a course and simplify it and shorten the amount of time that it takes, bring on some smart people who can help people with the stuff that was taking up a lot of time. And then it freed up time to be able to set up all these other ones, right? But let's do a risk analysis on all these, right? This one, I'm consulting people, and I could be wrong. Yeah, definitely could be wrong. I'll take that. And that discussion we have right off the bat that like, I don't know if I'm right or wrong. Setting up companies, the government is changing regulations every 30 seconds, and they're actually changing them as we speak today. Toko Crypto's on pause for setting up companies because they're changing the regulations. Building tax strategies, that changes all the time. So I have to bring on consultants to make sure that my strategy is always aligned according to the new regulations that are coming out. Portfolio assistance, like we're helping people trade, not even trade, just get into the in the market and get out of the market. But the market could do something stupid, and then the person freaks out, and we lose that person for portfolio assistance, or we fuck something up. We pick the wrong stuff, we put it into the wrong places. You know, people can get hurt through that. Government tenders, the government could just decide all of a sudden, like, I mean, the world could shut down, all the money could disappear, and all the banks could shut down. But also, the government could just decide that they no longer want to provide that to private individuals, right? Nodes, the nodes we're running might be for a blockchain that's not going to survive, and it tanks and it dies, and we lose all of our money there. Teaching, you know, it's teaching. People may not want to learn. Play to earn games. You may be playing a game that's making you money, and you make a big investment into a game that you're earning money from. Over time, that game dies, like Pegaxi or something, and now your money's stuck. Plus, you're in the game itself. Mining token, mines could get shut down, or the token could just not do well, or somebody could pump and dump the token and destroy the value of the token itself, right? So when you're going into all these things, you still have to do an analysis. But then the other analysis is how much time does this take, and how much time does this and this take along with this? And if I could reduce that time as much as possible and make it efficient and make it more functional, then I can add this on and make that automatic. Then slowly I set up one of these ones and have a team that's taking care of the government tenders in the background. Initially I set it up and then I automate it and then I get it going, and then over time it runs itself. These, once you set up, the nodes once you set up, they just make money, but the setup part of it is complicated, especially if you want to do it at a larger scale. Teaching takes up time no matter what, like there's no shortening the amount of time that it takes to teach. Play to earn, it's flexible for how much time you want. If that's something that you choose, you can always do that. And this is something that's a long-term investment. It's set it and forget it, you invest and hope that it keeps paying you dividends forever, right? But the amount of time this takes, actually now even this, the amount of time this takes is very minimal after you set it up. When you're setting it up, it's like, this took a year and a half, almost 2 years for me to set up. This took 6 months or 4 months. This took me 15 years to learn. This took me 15 years to learn. This is it's going to take about a year to get it going and functional, right? So when you're, that's why I said on that, can we go to the chart, please? The Bitcoin chart. That's why there are giant swaths of time where you want to focus on these things, right? There's like years of bad times in crypto. There's going to be months of bad times in crypto, but there have been years of bad times in crypto where you need to focus on those things. And you know what it's going to do? It's going to make you stop looking at your crypto portfolio. You won the game. What it's going to do is you're going to be like, oh my God, I bought it here and I'm sitting on massive losses. If you just keep staring at that thing, it's just going to make you miserable. You're going to be miserable around you. Your life's going to be miserable. If you buy it here and you just spend the next year, half a year, building out 2-3 other revenue streams, you're going to be focused on other stuff. You're not going to be sitting there like, oh, it's up, oh, it's down, oh, I'm rich, oh, I'm poor. They're like, forget about all that stuff. I'm going to go focus on making money for this period of time. And by the time you get 1 or 2 of them set up, the market will actually do what it's supposed to do. And by that time, you come back to crypto and you start paying attention to crypto in a pretty big way. And then execute your strategy during these times. And then around here, when you start to see, okay, things are starting to fizzle out, you go back into this stage of building your revenue streams and spending the time on it. Right? So let's look at this. Has a variable ROI. ROI is return on investment. Setting up companies, same thing, variable. Tax strategies, very variable. Portfolio assistance makes on average 100 to 500% for the investor. And we take between 10 to 20% as a commission. Government tenders are 12% per quarter. Nodes are approximately 100% APY, or APR technically. This is variable. This is very variable. And this is variable. Okay. All right, so I know the return from the consulting for me is, it's variable, but it's huge because it's what I love to do. I just really love sitting down with people and hanging out and going through their shit and figuring out the plan and helping them execute and stuff. That's like my jam. So I will never trade this for a lot of these. Not never. I will not trade this for a lot of these until, I feel like I've done enough in that zone. Okay. So because I love it, I give it more. I give consulting and teaching a lot of my time because I love it, because I know the change that it's creating for people, and that's value to me. What's valuable to me is knowing that I'm creating change for people's lives, right? This stuff, they have pretty variable returns, but the world just needs this stuff. So I'm like, okay, that's cool. I'll set it up and I'll find people who are smarter than me, who love doing this kind of stuff, and put them in the genius zone, and they can actually run those things, right? But the return on those is definitely higher than 40% a year. Definitely higher. It's probably multi-hundreds of percents. For the amount of actual money that I put into it and the amount of returns I get from it is probably thousands of percents, right? But if you count my time and my energy and what it costs me to do it, then it's in the 50, 60% range, right? You need to do that with yourself. Like, what are you doing in life? How much of your time is spent doing that thing? And what is your return on investment of yourself, right? So what people do is like, they'll go, oh, that course is $2,000. I'm not gonna spend $2,000 on a course. I am XYZ marketing guy. I do social media marketing, right? And I'm making $2,000 a month. But this course is $2,000. I'm not gonna take that course, but I'm gonna keep making the $2,000 a month. What you don't realize is like, okay, maybe you took that course and the course made you more efficient and allowed you to earn more than $2,000 a month. Then you should be spending money on that course. That investment would be worth it because it would make your returns go up higher. And if you are not returning more than 40% in a year today, you're losing money. By that I mean, if you are putting money into your business, whichever business it may be across any of this stuff, and the business is not returning you 40% a year on that, you're not breaking even. Okay, so our parents' world is gone. If you have a job, forget about it. But yeah, it's definitely higher than 40%, and I love it. So that's like, even if it was less than 40%, I would take money from here and spend it over here and actually do it that way. This portfolio assistance part, for us, it's like a lot, like for months and months, sometimes a year, it doesn't pay, and then when the market pops, it pays a shit ton. So the amount of time it takes and energy it takes is very minimal compared to the amount of returns that we get from it. The amount of money invested into it is small compared to the amount of money you get out of it. So it's really worth the time and energy. But again, I couldn't do this for myself. I got 50 people's portfolios to manage. So I couldn't just do it by myself. You got to bring people around you who can make the process happen, right? This 12% per quarter compounded is like 50-ish% a year. That's a really, really solid return to get through something that's super, super low risk. Because what this is allowing you to invest in the development of Indonesia, in the physical development of Indonesia. The government develops stuff, you help them develop, and you get a return for it. So it's a social investment project. It's making a solid return well beyond the inflation rate, and then it's a good place for me to protect my money and keep it, right? This is the new infrastructure that's running from here. So that's this revenue stream that we're representing over there, right? This is for anybody who's like, man, I don't have any money. Yeah, you're telling me all this shit, but this takes money. Well, actually, no, this doesn't. This just takes knowledge. You can get it for free on YouTube. I'm teaching it constantly. Well, actually, no, this part costs a lot of money. You got to hire a lot of consultants to figure out how to play the game. But my point is, if you don't have any money, here's one where you can make money from your phone. Just get a phone. We literally have hundreds of thousands of dollars of digital assets that we need people to play with. Okay, play a game. And they're the NFTs that have been bought by our friends, and they're literally finding amazing people who want to play games and earn money. And it's literally phone games. You can play 2, 3, 5 phone games, and you can earn a decent living from it with zero money. Here's a few that are free for anybody who wants to join. We're giving 7% commissions on capital that's raised for this token. So if you find somebody who invests, if you have no money and you just find somebody who's like, hey, I think investing into mining tokens makes a lot of sense to me because it's a token backed by real world value, and you bring somebody in, we'll give you 7% of the money that they put in. Great. You have zero money, you have friends, you can actually turn into a revenue stream, right? Or actually any of these other ones, if you bring me somebody to consult, I'll give you 15%. If you give me somebody to track strategy, I'll give you 15%. If you're setting up companies, I'll give you 15%. So it's not resources, it's not money that's stopping you from doing it. It's the application of the resources that you already have, right? I didn't get to this. I was almost homeless. 7 years ago, 8 years ago, I was almost homeless. I literally had to go to the food bank to get food. Zero money, no parents, no nothing. Okay, and I just followed all of this stuff, and I kept working. I was actually selling cell phones in Canada, and it's funny, I was selling cell phones and I was smoking a shit ton of weed, right? And I spent like $200,000 in my life on weed, right? And it was 15 years of smoking weed. So all my friends were like, you're an idiot. You should have invested that into a house. You should have invested that into a car. You should have gotten married. And I was like, I'm good, bro. I'm all right. You enjoy your car. I'm chilling. I'm lounging. I'm enjoying life. My quality of life is very high. My quality of life is extremely high, and I'm not going to reduce it by getting a house and a car, right? And they're like, you're a pothead. You're an idiot. And I was like, doesn't matter. I'm going to crush it. I know the game. And I learned this for like 15 years from some of the smartest people in the world on YouTube. Then I'm 28, and I'm telling my friends, quality of life. They're like, dude, you need to get married. You're almost 30. Like, this is sad now. You're a pothead. This is sad now. I was like, doesn't matter, bro. I'm enjoying my life. I'm chilling. And then 2018, Canada legalized weed, and I became a weed expert overnight. And I started a weed company, and it blew up, and I sold it, and then I moved to Bali. Right? So I love doing something so much. And I was almost homeless, but I just kept doing it because I loved it so much. And then I kept expanding all of these things. And even though the world told me I was an idiot, actually, guess who's the idiot sitting in minus 40-degree Canada today, compared to the pothead who's sitting in Bali on a Wednesday teaching, right? So the point is, you have to be creative in your own thinking about how you would think about all these things, right? Because if you just come from the place of, I just want to figure out more ways to add value to people's lives, right? Then okay, somebody who wants to invest in this and you help them add value by actually putting them in there, great, you earn some money with zero whatever. There's somebody who's bought a bunch of NFTs who literally doesn't have time to play them because they're too rich, but they're rich enough to buy them. They're happy to give them to you so you can play with them, so you can earn a living, and then you give them a return back. Great, that's a completely new way of looking at it. Like, there are people here in Indonesia who didn't have a job, and COVID shut them down completely, and they have no money coming in. And we literally took a revenue stream from the metaverse, right? Because these horses and things are racing in the metaverse, or games are being played in the metaverse, which is the internet basically. We took that and we attached it to Indonesia, and the average person on the street got access to revenue streams, which they would have never been able to access before, right? So I kind of went on a few different tangents there, but the point is, you need to do an analysis of how many revenue streams you have, how many resources you have, how many can you set up that are already part of your existing repertoire of skill sets, or how many additional ways can you add value to people's lives. And then if you have capital that you're making in crypto, definitely take it from crypto. Definitely take it out of crypto, okay? Like me and Jay, he's another great educator. We always joke about stuff, right? Like, people ask us, okay, today, like this was in November. Somebody's like, today, do you buy $200,000 of Bitcoin or do you buy $200,000 of real estate? And both of us just went, real estate. And they went, why? You're the crypto guys. You just said real estate sucks. But why would you today buy $200,000 of real estate? Because I was like, Well, in today's market, in November's market, I'd buy that real estate for 200,000, I'd sell it for 200,000, and I'd take the cash for 200,000 and I'd keep it. Rather than having crypto that's going to go down 50, 60, 70, 80, 90%, or 100%, right? So there are those times where you need to focus more towards these kind of revenue streams. So does that make sense?
If you guys have any questions, feel free to ask directly.
All right, so now how many of these can you access? You can access this one. If you want a piece of the government tenders, just sign up for our group, we'll get you access. We already have investors that fill out that whole thing, but we have more tenders coming up that we're happy to offer up to people, and you get to pick little pieces so you don't take a big investment on it. The risk you take on it is like single-digit thousands of dollars for some people, and the return is safe, right? That's as safe as I like to get for it. This, we will open up a raise round for probably within a month or so. Same thing, we pool money together from people who can't afford nodes by themselves. We pool the capital together and set up the nodes together and do a profit sharing back to it. So you can access that. This, you can access by just helping people understand that that's a service that exists. You just talk to people and then you can actually earn 15% of everything that we make. When we manage somebody's portfolio and we make them money, you will get 15% of everything they make. 15% of everything we make, which is like the 20 or 10% that's the commissions, forever. Imagine you bring like 10 people, right? And 10 people's money starts getting managed. Their life is improved. They didn't know what to do in crypto. They're gonna probably lose all their money. You brought them, got them strategized, or you just connected them with us, and then they're happy, they're making money, and then you have 10 people's portfolios that are making you money. That counts as 10 revenue streams. And how much time do you spend? None. You just go to a friend and go like, hey, I heard you lost a lot of money in crypto. They go, yeah. And you go, how much? Too much. You go, okay. Have you heard about strategy or planning? Or like, a piece of paper where you can put stuff down and come up with a plan and then you execute it. And I guarantee you people will be like, yeah, 100%. That makes a lot of sense. Please help me understand that and help me do that, right? Or like, whatever business you do, I guarantee you there's 4 or 5 revenue streams sitting right next to you the whole time. If you just start thinking about it like this, you will actually see them, and you'll see them as value-add mechanism. But you have to always think from a place of, how do I figure out new ways to improve people's lives, right? That's the most important thing. Now, the great thing with a lot of this stuff is, this is connected to this, is connected to this, is connected to this, is connected to this, right? This one's my favorite, this mining token. It's like we take mines that are commodities, so the value is coming from the commodity asset class. We turn it into a security, so you register it as a security. So it turns into a stock, so it's like buying a stock. And it's backed by physical property, which is physical mines. It's on the blockchain, so it turns into a token. So it is a crypto that you're investing in. Plus it turns into a DeFi protocol where some of the yield coming from the mines is being paid out to the people who hold the tokens, right? For me, it's a great place to stash money and put it away, but it's also like, it's some commodities, it's some stocks, it's some property, right? Or like, there's right now digital land. So instead of this, I would buy digital land. You buy the wrong one, you'll lose all your money. But like, if you buy the right digital land, it'll be very, very valuable. This, I would buy in the new way. Like, if your revenue streams are depending on this, you better have a rethink. You got about 6 months to figure your shit out, because after that, you're about to have a very terrible day when it comes to this. But pretty soon, all the stocks in the world are going to be transitioned onto the blockchain anyway. So get ahead of that curve and start learning about how to participate in that new stage or the new system, right? Now, here is how this loop runs. Because everything is about loops. And we'll add one more thing to that loop, but for now, let's just think about it like that. Okay. I make money. We make money in our jobs, in our revenue streams, whatever you do. That money gets fed into initially your bank account, but don't let it sit around there for too much. Obviously, have enough cash on hand to be able to live and survive and stuff, but not enough so that banks can steal all of it. That cash is then put into crypto as an investment, or maybe as revenue streams, or maybe as a blend. We're going to look at how to like think about that. The money you make in crypto goes back into your revenue streams and increases your capacity to make more money in the revenue streams. And then the revenue streams make you more money, which goes back into crypto. And by crypto, I mean, like, it could go into property, it could go into stocks, it could go into commodities. I'm just saying crypto because as far as I'm concerned, I buy everything through crypto. When I want gold, I buy PaxG. When I want stocks, I buy cryptos because they're the new stocks. When I want property, I buy digital tokenized versions of property. So as far as I'm concerned, my loop just runs like this, right? When crypto is up, your money needs to be flowing this way. And by crypto is up, this room will be triple full. Your grandma will tell you, she's like, I heard about Bitcoin. The moment somebody like that, somebody who's from, and people around you, taxi drivers are telling you about Bitcoin, your money better be flowing out of crypto into the revenue streams, right? Then as crypto goes from the top to whatever local bottom, usually takes like 6 months, sometimes it takes longer, sometimes it takes a year. Then your revenue streams are just feeding into cash. And if you're like, I don't want to hold a bunch of cash at the bank, you can then put the cash into crypto and turn it into stable coins and hold it like that, right? But you're just building up your firepower, your dry powder, as we call it, right? And along this way, it's gonna feel like shit. It's gonna feel like shit. When you're like, you've been holding something, you've been waiting for it to go up, and then it goes up, and then I tell you, sell some, you go, but it just went up, right? It just went up. Why would I sell it now? It's going up. No, you go, it goes up a bit, you take a little bit out. It goes up more, you take a little bit out. It goes up more, you take a little bit out. We'll do a talk about profit taking. We've already done previous ones. But this process is not gonna feel very good because the market's gonna be doing well. And everybody around you is gonna be telling you, hey, this thing's going to the moon. You should not sell it. You should hold on to it. At that point, you go, yeah, no, it's good. I'm gonna actually turn into real wealth because this is not wealth. 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 Wait, but where's the wealth? A home to live in with people that you love, put some like food from here, and travel. That's the real wealth. This is fake wealth on a piece of paper. This is fake wealth on a piece. It's not wealth. It's just a fake number. It's a hypothetical number. Until you realize it and you pull it out, and you actually put it into something that generates revenue for you, and then the thing is actually allowing you to convert it into cash, and the cash is allowed to be spent on things that you do for your life, that's wealth, right? So when you're doing this, especially for like the first 2-ish years, if done right, there's gonna be a lot of just setting up, trial and error, testing, time and energy, feeling like crap because you feel like you're draining your crypto portfolio. But when the bad times come, your money will be outside of crypto. Like we took everything out in October-ish, we took everything out of the crypto markets. And the markets ran up from October to November, and everybody was like, we're missing the train. Look, everybody's getting rich. Why are we out of the markets? And we're like, don't worry about it. We've already transitioned the money, actually made the money, and we're putting it into revenue streams, which are gonna make us actual money, which are gonna be positive in a world where crypto falls off of a cliff and goes negative, right? Then as crypto is coming down, you deploy that cash back into crypto. Because all I can guarantee you is, this is gonna die, this is already dying, this is as good as dead, it's gonna die very soon. This is a relic, this is the future. I can guarantee you that. All of this value that's in all these other spaces is moving here. I mean, we're literally moving physical property, mines to there, registered security, stocks to there, mines that are commodities to there. All of this is there. The entire world is about to get taken over by this. So when crypto's down, you redeploy as much of your cash back here as you can. Plus, you know what's happening in the background? Your revenue streams are making you revenue. Right? So even if it keeps going down lower, you keep getting more money and you keep putting it in. Right? So and now another kind of, this one's dangerous, please use with care, but here's a trick that the wealthy use. Again, this is like playing with fire, but it's very powerful fire if you actually know how to play with it. Is debt. Right? Because I take $100,000 of cash, I put it into the crypto markets, it goes down to 50,000, I don't sell it. It goes up to 70,000, I don't sell it. It goes down to 20,000, I don't sell it. It goes up to 200,000, I sell 100,000 and I take my money out and I put it into the revenue streams. And I put 100,000 in at these kind of returns. Let's say it takes a year, let's say it takes 2 years for the 100,000 to come back out again. But I have revenue streams that are now making me $100,000 every 2 years, so $50,000 a year, right? That 100,000 comes out, and guess what? Crypto's low, and I buy a bunch of crypto while it's low. Now I can take that crypto and I can leverage it and borrow against that crypto, right? That's actually the biggest trick that the wealthy use to generate capital and cash and money and revenue streams forever. But you basically take your assets when they're low, not when they're high, and if you do this wrong, you will lose all of your money. So this is just an example. But when the crypto assets are low, which is when you should have bought them anyway, because this loop comes back around, you can then leverage them and borrow against them and use that. Well, what some people do is they borrow against them and then they turn it back into more crypto. If you know crypto is going to do great, and you can verifiably say that it's at some kind of a bottom, especially on this macro scale, then people just turn it around and buy some more crypto, right? I have $100,000. Put 100,000 here, 100,000 came back into the bank. I take 100,000 and put it here, buy $100,000 of Bitcoin or whatever, and I take it to a lender and I say, let me borrow $20,000 against it. They give me $20,000. I take $20,000 and go back and buy more crypto with it if I want. Or I take $20,000 and I put it, and my $20,000 is at a interest rate of like 4%, let's say, and I just put it into a revenue stream that makes me more than 4%, right? Because if I can get debt at a low percentage, and I can verifiably make more on my debt, that's smart debt, right? If I tell you, I'll give you $1 billion, and I'll charge you whatever, 2%, 3%, 4% on it, and you verifiably know that you can make 100% on it, 20% on it, whatever, a year, you can pay me my 4% and keep the 16%, and that's your revenue stream, right? So in that case, what you would do is you would, the crypto gets leveraged and the debt either goes to your revenue streams to make more money than it costs for the debt, or it gets put back into crypto if you know, hey, I can service this debt for 2 years, 3 years while I'm waiting for crypto to come back up again, right? But all this is these are loops. These are constant loops. Now, these loops also give you a tax benefit. Depending on where you do it, depending on how you do it, depending on which regulatory structure you use. Man, I gotta drink something. Depending on which regulatory structure you use, there's a tax benefit, right? Because when I make my gains in crypto, let's say I do this within Indonesia as a company. Let's say I do this as an individual first, right? I make a bunch of money in crypto, I get capital gains tax, 15, 30%, depending on where my jurisdiction is. Or if I'm in Indonesia, there's no capital gains tax, but the moment I pull it out into the bank account, I get a 35% income tax on it, okay? I make money, the revenue streams, as an individual, and when the money comes back, I get 30% income tax on it again. That's not very brilliant. As a company, I take my crypto and I put it inside of the company as a company asset. When I make revenue on the crypto, I pay 0.5% tax. Or if I can, let's just say one example is I pay 0.5% tax, and I turn it into a revenue stream and I make a bunch of money, and when the money comes back, I pay another 0.5% tax, and my tax is paid, and now I put the money back into crypto and that's zero tax. So I paid 1% tax as a company, right? Then I generate debt. Debt is completely tax-free. It doesn't even count as a taxable event. And as a company, you can generate debt much easier than you can as an individual, right? The other thing that happens when you're kind of looking at this whole landscape like this is you become very well versed in what is going on, right? Over here, do you even know which stocks you're in? Do you know why you're in those stocks? Do you know what your financial manager is doing and why they're doing it? No, because they're way smarter than you. And that's why they're way richer. They know how to take all your money along the way. This, do you really understand the game you're playing? I just explained to you, I mean, I'm not even a real estate guy, I'm a macro guy. I just explained to you a bunch of things that I bet you didn't even think about when it comes to this. So do you really understand it, or are you just following the game that our parents told us to play, right? And our parents all love us. They're sweet people, and we all love them, but they're not the people that you should be taking direction from when it comes to life, because they lived in a different world. And we all give direction from our own lens, and this is a different universe we're existing in. This is not the universe they came from at all. This stuff, you're not gonna do it until you know what's going on. Because the risk is, if you don't know what's going on, you could lose your money in this, right? And there's nobody to be like, oh yeah, just, we'll take care. Like, we do it for people, but I specifically make sure that people understand what they're doing in this space before they enter the space. This consulting part of it is really about making sure people understand the risks that they're taking here, right? So when you're doing this stuff, you become radically self-responsible. You see your own capital flowing into different tranches. You understand the different kind of flows that it has to go through in order for it to work. You understand the risks better. You understand, hey, is that something I want to do? Then you come from a place of like, I want this lifestyle. Like, one of my like non-negotiables is I want to control all of my time at all times. I want 100% control of all my time. Nobody can tell me to be somewhere and talk to somebody who I do not want to be talking to at that time. That is an absolute non-negotiable in my life, right? So for that, there was a bunch of revenue streams that came up that would have made me so much more money. Like, I could have put my weed company here, right? Weed companies make a shit ton of money. And I could have kept working for my weed company. But the amount of time and energy it would have taken, and that it required for me to wake up in the middle of the night to attend a meeting, sleep and snuggling my girlfriend to sleep and making sure I snuggle her awake is not, it's too expensive. That's where too much money is more money is too expensive, right? So then you have to decide, what lifestyle do you want? What kind of things can you make fit into that? How do you come up with a plan and strategy? What revenue streams do you pick that actually fit into that kind of lifestyle? Which ones can you even afford, right? If you have zero money, then this one, consulting things up here, or your own business, there might be like a few other things you could start doing that would make you more money. If you have money, okay, then you start putting it into these other kind of places, but you become radically self-responsible in this whole process, right? This is the part that most people are missing from crypto. It's like, yeah, crypto's great sometimes, and it's horrendous a lot of times. People don't know what to do during the horrendous times. What you do during the horrendous time is you just focus on this. You forget about crypto. If you're sitting on a loss and you bought solid shit, don't worry about it. 100% of anybody who's ever bought solid coins ever would have not lost a single penny if they didn't sell it lower than where they bought it. And that's a very stupidly simple fact, but as long as you're picking the right shit in crypto and it's down, you forget about it. Leave it be. Set price alerts around where it is, and by the time you're focusing on all this stuff, you're like figuring things out. By the time it's 6 months, 7 months down the road, and you've actually done work on there, guess what? The price alert will trigger, and crypto will come back up again, and we'll be back to good times again, right? So then let's look at risk. So before we go into risk, let's think about it like this, right? I guess it's a part of risk. What's the biggest risk to your money today? The biggest risk to your own money is sitting in this room. Just look at a mirror and you'll see the biggest risk to your own money. The only person, like literally the only person who's even allowed to lose all of your money is you. It's a fact, right? There's absolutely nobody who can, unless you get like hacked or stolen or something, even then you get hacked, So the biggest risk to your money is you. The biggest reason why trading is not a revenue stream is because people are trading. The biggest reason why bots don't count is because people program the bots. You know the best thing you can do in crypto? Don't touch it. I'm not saying hodl all the time, but like from 2020 until like 2021, if you just didn't touch your portfolio, you're the best trader ever. Some of the best traders on exchanges are people who are dead. That's a fact. They track people, the best traders on exchanges, some of them are dead. Now, they were trading crypto back in 2013, so that's a little bit of a side fact. But if they were just trading in 2013 and you just died, it would have been the best thing you could do. And all these alive people are like, I'm gonna make this money. And saying, no, you're not. You should just die, bro. Like, the most profitable thing is to die, okay? But that mentality can be incorporated into your crypto investment journey too. That what I do is I do my best not to mess with it. I do my best just to call. Can we go back to the other chart? I do my best every couple of years to just know that we're in like this range. And then every couple of years, figure out that we're in this range. And then every couple of years, figure out that we're back in that range. That's it. It's that simple. And it takes months and months for it to happen. You can clearly see it around you, you can see, woo, we're going to 100K, we're all about to get rich. Oh, no, we're going to go into 100K, we're going to 100K. Fuck, shit. Oh no, we're going to zero. We're going to zero. And the moment everybody's like, we're going to 100K, take your money out. The moment everybody's like, we're going to zero, put your money back in. It's like once in a 6-month process, right? And what in that process, you know what I'm doing? Not touching it. Literally not touching it. I just try to get in here and then don't touch it. Go focus on other stuff, revenue streams, life. Go have some coconuts. Go snuggle. Go do whatever other thing is actually valuable to you. Once it goes up, right here we sold. Like, ideally you want to sell here, but who gives a shit? We sold right here. Bought right here in the zone, and then sold right here. And it's not very complicated. And now bought here, and guess what happened? Oh, it dropped. You know what I did? Set a price alert, forget about it, and go focus on life. Right? Because in the bigger kind of picture of things, if you buy here or buy here or buy here, it doesn't make that big of a difference. I mean, if you're a calculator, yeah, it makes a difference. But the whole point is, if you're worried about all that, you're reducing your quality of life. So today, where we are, I've said this before, and I'll say it again, and it's not a very popular thought. I think we're going to go parabolic before the end of the year in crypto. You know why? Because right now nobody likes crypto. Everybody hates crypto. Nobody wants it. Nobody believes in it. Everybody believes that we're going down. Right? Right here, I was 100% sure we're not going to 100K. You know why? Because YouTube was telling me we're all going to 100K. Right? So now that you're in this stage, and you're probably in the crypto markets, between now and the end of the year, you have time to think about your revenue streams. Right? First of all, have a strategy for profit taking, because this next run we have is going to be, the final one before we go off of a biblical cliff. And I mean like stocks, bonds, housing, precious metals, crypto, everything except for the US dollar is going to tank like we've never seen before, like 1930s. Like we're about to go through the single greatest financial event that we've ever seen in history, and it's going to end in war. But on a positive note, on the good side of things, you can actually prep between now and that event happening to take a bunch of profits, and then think about all the revenue streams that you can generate today. Think about the ones that are in your business already. Think about which ones in the traditional world you'd like to add on, and then think about which ones in the crypto world you'd like to add on, and that's your gamut of things that you do to actually generate money, right? Like, I know people they're selling Heelys. It's like some little device. They make 500 euros every time they sell one of those. They just talk to people and they sell them, right? There's a million ways to actually make money in this space. So now, risks. How do you think about risks? Can you please go back to the other one? In traditional risk terms, this is supposed to be the lowest risk thing. Lowest risk doesn't lose money, doesn't make money, supposedly, right? This is supposed to be the next lowest risk thing. Protects wealth. Gold, precious metals, all this stuff. Protects wealth, supposedly. This is supposed to be the next lowest risk. It's residential. People always need places to live. Real estate always goes up, so it's the next lowest risk. So, and next higher risk, let's say. This is the lowest risk. This is the second lowest. This is the third lowest. This is getting into the high risk range, where you're investing in companies which go up a lot, but there are times when they go down. This is like insane amounts of risk. This is like people wonder why you're so nuts enough to even be here, levels of risk. This, in the traditional sense, you just have one of these sticking out with your job, and they consider that to be low risk. And then you wonder why, when somebody loses their job, their whole life falls apart, right? In this new world, this is the highest risk thing there is, by far. By far. Because you hold it, you lose money. You keep it for long enough and the banks will take it. Before 2024, the banks are going to take all the money from the banks. For a lot of people. If you're like, nah, Sim, that's not going to happen. Do you have a Russian friend? Talk to them. Talk to your Russian friends. Tell me how that's been going for them. We're all going to get Russianed. and they're going to rush us from here. And then we're all going to be rushing to the bank, but there's not going to be any money in the bank. Okay? So this is by far the highest risk thing that you can have. And if you think this is, if you're living life like this is safe, you're about to have a wake-up call. This is still low risk. This is still extremely low risk, generally. Like, you know, gold, precious metals, all that kind of stuff. It's not going to make you very much money, but, you know, after a 10-year period, it will definitely hold on to your wealth, if not grow your wealth. Okay, so it's still low risk. This, in today's market value, is way too high risk. Property values that are at a peak, at a local peak, they're going to drop between now. They're already starting to drop in the US. China's already fallen off of a cliff. Australia's turning over. We're watching all these markets start to peak and crest. Half of Canada's fallen off of a cliff. The other half of Canada's just starting to curve over. But between now and 2024, property value is going to drop off of a cliff. This commercial one, forget about it. You better run like hell. Right now, Bali's open. You better sell that shit today for whatever price you can sell it for, because we're about to go into way deeper lockdowns. Apparently, like, monkeys bit somebody or something this time. It's like monkeypox now, all of a sudden. Like, great, there's going to be some new bullshit story that they come up with. But your commercial real estate is going to die. So this is extremely high risk as far as I'm concerned, because you take a massive risk on one property and you hope to God that it works. This is, I don't consider this low risk. Right now, this is medium to high risk for me. 2023, 2024, I'll bring it back into the low risk range because things will be so cheap to buy. Okay. This, for me, is extreme risk, because right? So this is the market, right? This is the stock market. This is from 1872 until now. Do you think you should take profits? This Ponzi has been running for, well, a long time. And it's like last time it ran up, it made a peak here, 1930s, 80% crash. Didn't come back for like until 1950 something. 25 years of not making any money. Okay, this is the last time this happened. And then what happened? We went down a bull run from 1930 until now, and we're just getting more and more parabolic. Does this look like anything? Does this remind anybody of like a 2017 crypto Bitcoin chart? This is just how markets work, right? And they keep going and keep going and keep getting more and more parabolic and get more and more people in, and then they just, boom, fall off of a cliff. So as far as I'm concerned, this game is at its end, okay? On this same time scale, this is what Bitcoin looks like. The exact same time scale. And you're like, but Sim, that's even more parabolic. You could argue that, for sure. It's definitely more parabolic. But that game that was played for this long is starting, it's at the end. This game is just starting. It just woke up to this whole space. So you want to be in the businesses and the revenue streams and the asset classes that are the new asset classes that are actually up and coming, right? So, and this is also why this has gone from 2 pennies. No, this was 0.8 of a penny. Bitcoin was 0.8 of a penny, $0.008 when it started. And now it's at, who cares? Oh my God, look, oh my God, it went to like 70, and look, oh my God, it went down here. Oh, that's so terrifying. Isn't that horrible? Aren't we all falling off of a cliff after we went from 0.8 of a penny to $31,561? Right? So when you look at it from this perspective, that the stocks are the riskiest because the game is at the end. So for me, this is way lower risk than this. Personally, for me, this is way lower risk than this. Personally, this beats this because I can buy digital versions of this, and this allows me to connect a bunch of these up in a way that make me money ongoing forever. Plus, this is not crypto. It's called blockchain. It's the basis of the new metaverse that's coming out. The metaverse is already around you. Metaverse is going to be a universe where the digital world enmeshes with the physical world in a very fundamental way. So you can actually pull value out from the digital world and put it into the physical world, or you can take physical value in the way of mines and inject it into the digital world, and both of them will live in harmony, right? So when you're investing in this, do not take a big enough risk in this so you can't last a 2-year bear market, right? So when we're talking about risk, do not risk. People say don't put money in that you're not willing to lose. Those people are playing the game of losing money, right? In this, if you don't have a strategy and you don't have a plan, enter the space and buy the wrong coins, you will lose 100% of your money. That I can guarantee you. This space is very good at taking 100% of somebody's money if they don't understand the game that they're playing and they don't have a plan and they don't have a strategy. But if you enter with a strategy and you understand the assets that you're buying and you buy the right shit, do not put money in here that you need back within 2 years. Simple as that. Because you'd buy it at a good time, even if you bought it at the worst time, even if you bought it at $69,000 Bitcoin, right? Just give it 2 years and watch where it is after that. But you don't put money that you don't need, that you'll need within those 2 years. The money that you need within the next year, you keep it as cash, ideally, right? Or if that's not a situation for you, you decide how much cash to keep. But if you have enough cash, you keep enough cash on hand, but not in the bank. You keep it as stable coins. Whatever money you're like, I don't want to put it in here, but I still want it to work, and I need it. Let's say I need it in 3 months. I put it here. I need it within a year. I put it here. I need it within 2 years. I put it here. For me, I invest a bunch of money into my own self. When I was talking about that course, I invested $200,000 into weed, and it turned into a weed company, right? So now I've invested like shit tons of money into my own education and learning and classes and experts and consultants and all this kind of stuff, right? So what you do is you take the money that you're not going to need for the next, like, you imagine this is money that I'm going to imagine just disappeared today and I don't have it anymore. And you go through the exercise of feeling like I don't even have the money anymore. Then you imagine for the next 2 years, I can't even touch that money. It doesn't even exist. Okay? Whatever amount that is, that feels right, that's what you should enter in here. For somebody who's new, if you're a crypto head, like, we go 100% into here at all times, right? Because we understand the low risk nature of what we're doing here. Whatever money comes out of here, you need to either figure out what to do with it. You can loop it back in here again, or you can loop it from here, or you can loop it from here and then generate debt against it. And then some of it, if you're like later on, I'm going to be actually looping some of this to here and actually buying some property, because I think having a farm is going to be, I'm already getting a little farm, but that's a different story. But that's it. That's how you need to think about your life, right? Risk here, because let's say, when you imagine how much money could I put away for 2 years, and if I imagine losing it today, it won't destroy me. That's probably like 20-30% of your net worth or your liquid cash. Some people, 50% is okay, depending on your risk profile, right? If you put 30% in here and you leave it for 2 years in the right stuff, again, the right stuff, 90% of these cryptos are scams, okay? 60% are scams, 30% will lose your money without even trying, because they're gonna die. This is just how this game has worked, and this is how startups work. But those 10% of cryptos, if you can verifiably say these are gonna last, and you buy those ones and you hold it, they will almost always be 10 times higher, 10 to 20 times higher than where they started 2 years down the road, especially from where we are today by 2024, right? So if I put 20% here, and then it even just as a 5x, I get 100% of my entire net worth by taking a 20% risk here. But if I lose that 20%, whatever, or if some of those coins are shit coins and I end up buying the wrong coins and I lose some of them, whatever. Then I took the 80% of it and I fed it into here. And actually the single best investment you can make in revenue streams is yourself, is absolutely yourself. There's one investment that always pays, that is always taking care of you, it's yourself. So if you can find that you could invest more money into yourself and actually increase the amount of value that you're adding to people's lives, which would increase the amount of money that you're earning, that's a great first step. Then like we said, figure out alternate ways to do what you're doing, but in a way that you can add more value in different kind of methods. And then if you have money invested into different things, and even this, this is super low risk. It's with the government. It's the Indonesian government. Unless the government disappears, you're not going to lose your money. This is medium risk because it depends on the system still running and being viable. This is medium to high risk because we have to launch the token and we have to make it functional. But if it's functional, the returns are insane. This is like no risk. If you're somebody who's playing to earn, you're not taking any risk. Zero. This is zero risk. The commissions for consulting, those are zero risk, right? So then you pick, I'm gonna take a little bit of low risk, a little bit of zero risk, a little bit of low risk, a little bit of medium risk. This is my, I rely on this. So this is like I consider it low risk because I'm the lowest risk. So I'll take that. So now I got a bunch of low risk and medium risk stuff. And I'll take some high risk stuff. And then now my risk balances out to medium. Does that make sense? Any questions?
Hey, Sim.
Yes, sir.
Great presentation.
Thank you.
I think you mentioned in a previous talk about the about inflation and the S&P index. Does that reflect inflation as much as it's actually reflecting the value that these companies are generating?
So can you just, without the mic, can you say the question? Yeah.
Yeah, pretty.
I know, it's like too bassy, right? It's like,
Yeah,
damn.
the S&P chart, the price
Yeah.
Going up.
Yeah,
Does
yeah.
that actually reflect inflation,
Yes.
or does it
Yes.
reflect the value that these companies are generating?
Yes.
Or both?
No, it is so the question was, does the S&P going up reflect the value that the company is generating or inflation or both? It's technically a representation of both, but the realistic value these companies are generating is not, their profit to earnings ratios are 20, 30, 40, 50. That means they're saying they're adding 50 times the value of the profits that they're earning. The profits that they're earning is a signifier of how much value they're actually adding. So here's what happens, right? This is why this ebb and flow is so important for us to understand in this space. There are times when the dollar is gaining value, like November until now, and you can see it on the Dixie chart. You can see dollar pumping. Let's actually look at it. I think this will be very powerful for everybody to see. This has been the dollar.
Relative to?
All other currencies. Yeah, this is the dollar against all other fiat currencies. This is what the dollar's been doing ever since. This is what the dollar's been doing since back in, what is this, May? Can you go here, please? Right here, right there at the bottom. Yeah, so since May of 2020, 2021. The bear market of crypto started then. This pump we had was a fake pump, okay? But the point is, the dollar has been gaining in value. Against what? Against everything. Everything else was getting crushed in value, right? So when they were printing dollars to infinity, the dollar was actually losing value because they're printing them, right? And they're flooding the market with it. What happens then is the market runs up. That's why from this part of 2020 until the end of 2020, the markets ran up. All of them ran up because they're printing dollars and flooding into the markets. When you flood fiat currency into the markets, the smart money knows, hey, this is burning a hole through my pocket. Convert it into assets right away. Hotcakes, convert it into assets right away. That makes asset prices pump. Then when they're like, we're going to stop printing money, asset prices already start to deflate and drop. And then the dollar pumps against it. So actually, you want to be in the dollar here, right? And now that all the assets are pumped, and they're like, we're not going to print money. We're going to actually pull back the amount of money we're printing. The markets are kind of tumbling. I don't think they go straight down. I think they do this and they do a blow off top before they go down. But when they do that and then they crash, the central banks go, oh, sorry, we broke everything. We're going to print more money. This time they're going to print the entire US money supply in one go. It's probably going to have to be around $30 trillion that they'll have to print just to save the world. When they do that, now dollar's peaked. And dollar probably make it like, when the crash happens, dollar will spike again and create another peak. On the way up to once asset prices go up and the dollar goes down, you move out of assets into dollars, right? Because they're not printing dollars. The moment they go, we're going to print dollars, they'll say we're going to print dollars when the market crashes. So the markets crash, everything's cheap, dollars are still valuable, Then you go from dollars into assets, right? And when they print money, they will inflate like crazy again. But yes, most assets, housing has not gone up. Stocks have not gone up. Crypto hasn't even gone up. The dollar's just gone down, right? But there's this ebb and flow to it. So that's what I'm saying. Like in revenue stream terms, here you want to be in crypto. Here you want to start building revenue streams. Here you want to deploy your capital into crypto again. But what did we do? Here, we completely ignored crypto, and we're sitting in dollars. We actually had a lot of purchasing power in dollars. Then when crypto ran up, by about May of 2021 is when we heard about it, and we moved into crypto when crypto was at the top, out of dollars. So we took our dollars, which had lost value, turned it into crypto, hoping we would get rich. And crypto went down and the dollar went up. Now we're poor in crypto, and guess what people are doing? They're selling crypto and they're going back to dollars, right? So the game is to trick you to do the opposite. Whereas, well, what did we do? We took profits back here, but mainly took the vast amount of the profits here because the crypto markets pumped during that time, which was a fake pump caused by Wall Street pumping in money to launch an ETF the day at one of the peaks. From here to here, you put it into revenue streams, and then here you convert it back into crypto, right? That's a great question.
Any other questions?
Satu mas, satu lagi?
Can you explain ETF?
ETF. An ETF is a lazy person's way of not paying attention to what they're buying. It's called an exchange traded fund. It's where people way smarter than you go and build a bundle of investment products, and they put them together in a way so they make the most amount of money. And they trade it in a way that makes the most amount of money for them. But then they turn it around to people and they go, hey, this is something safe to invest in, you should buy this, right? And we go, what is it? They go, oh, it's a little bit of mortgage-backed securities, it's a little bit of insurance, it's a little bit of this, it's a little bit of blah, 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 blah. It's this cake I've made for you. And you go, I don't know what the ingredients of the cake are. They go, oh, it's okay, it's a delicious cake. Eat it. And you go, cool, here's my money, give me the cake. And you eat the cake and you're like, this is good cake. And you get a little piece of the cake and you eat another piece of the cake and it's good cake. And then you slowly keep eating the cake, and then one day you realize, oh shit, the cake's hollow, and then the whole cake falls apart. That's what an ETF is. Okay? An exchange traded fund is one of the best. ETFs are bad, ETNs are a whole nother, oh my God. If somebody says the word ETN to you, run for the door. Okay? But it's basically, it's Wall Street coming up with smart financial products that look like they're fantastic until they're not. It's like most of the crypto products, right? It's basically when somebody is facilitating you being ignorant as an investor, you're paying a price for that. And that's why those investment bankers are the richest people on the planet. And the people who give them money look like they're getting rich for 14 years, and then every few years they look like they're collapsing. You know, they look like they were getting rich from 1987 until the year 2000, and on paper they look like they got really rich. And everybody's like, I'm so rich. And it's like, no, but you don't have wealth. You don't actually have lifestyle. You don't have any of the stuff. And then from 2000 until 2002, crashed off of a cliff. And they didn't come back until 2008, and then crashed off of a cliff again. They didn't come back again until like 2013 or 14 or something. So from 2000 until 2013, those people barely broke even for 13 years. And then from 2013 until now, the last 9 years, they look like they're crushing it. And it only takes a few years for us to get convinced that the bad times are not going to come back, right? So the traditional financial world is built to keep you dumb and keep you ignorant about what they're doing, how they make most of their money. That's why I love the crypto world, because that world is there to educate you into becoming self-sufficient and self-reliant, basically, right? But that's also, sorry, go ahead. That's also why you have to understand there's wealth transfer. Wealth is being transferred from $1.6 quadrillion of value in mostly in derivatives, actually, like we looked at in the last meeting. Derivatives, stop, you know what? Let's just look at it again, because I feel like this is something really important that most people need to understand. No, we're over time. Okay, so it's just, wealth is being transferred from traditional structures to the new structures, and ETFs and stocks are the old structures.
ETF is a retail product? Like an ETF is more like a retail product?
Yeah, I mean, ETF, everybody invests into ETFs, but it is more accessible to retail.
Why people are paying for
Oh, like that. Okay, so sorry.
Why spot ETF seen as a better catalyst for crypto for Bitcoin than future?
So a futures ETF is a way for Wall Street to make bets on the price of Bitcoin going up and down, but not actually buying any Bitcoin. A futures ETF, futures is simply making bets on the price of it going up and down, and you can make leveraged bets. So you can bet $1 and you can win $10, right? That's what derivatives are. When you do that to a market, it incentivizes whoever's making the bets to manipulate the market to make the bets come true. It has nothing to do with the value of the asset, right? Why is gold suppressed? It's because they have futures ETFs and futures trading for gold that's way bigger than the actual gold market. So it's like, gold is at a certain price. I own a bunch of gold. I have $100 million of gold. I can go make a bet saying, I bet $10 million that the price of gold goes down, and if I win $100 million. That's my leverage bet. They go, okay. And then I come to the market and I dump my gold and make the price go down $100 million. Plus I made money on this side. That's what a futures ETF does. It's actually Wall Street's way of being able to manipulate an asset to whatever price they want, to make it go from 30 to 60 to 30 to 60 to make it do this. So only they make money. A spot ETF is where when somebody invests into an ETF on Wall Street or in the traditional financial world, they go out and buy the Bitcoin itself, right? That's different because if people are investing and they're actually buying the Bitcoin, then they're taking Bitcoin off the market, which means the price of Bitcoin goes up, right? But they're not going to launch a spot ETF until they've taken all our money. That's why this whole process is going to play out like this. Spot ETF is not happening until next year, until the regulations come out properly. There'll be lawsuits around like delays and stuff. But then this whole thing's going to crash off of a cliff. Housing, everything, stocks, everything goes biblical off of a cliff. And like the snap of a finger, not this like 9 months warning stuff, snap of a finger, overnight, cyber attacks from Russians or something will take down the entire financial market, which makes banks insolvent. When banks are insolvent, they do bank bail-ins and take all your money from the bank. And on the other side, when nobody has money left in stocks and their houses are worthless, look worthless on paper, a Bitcoin ETF will be launched. So the smart money can come in and actually invest and buy Bitcoin directly. So that's the difference between the two.
And it is by companies exposure to Bitcoin. It's easier to buy an ETF than for a company than just buying Bitcoin stock, right?
Yeah, 100%. It's a massive difference, right? So when you're buying a company that owns the ETF that is attached to Bitcoin, it makes a lot more sense. But a futures ETF is a completely different game than a spot ETF. But for me, I'm like, why would I do that? Why, when I can buy the asset directly, why would I as a person do that? Even as a company, it's not that complicated. Once you learn the workflows and you have the right strategy in place, you can do it as a company. But yes, a traditional company, they're not going to do, they're looking for regulations to come to this space, right? So that's also why a lot of these revenue streams and stuff we're setting it up in a way so that it's regulatorily compliant going into the future.
I have one more question from
Okay.
the audience.
You got a question? Yeah, right there. We got a question in the room.
You were saying that before the stock market is going to die soon.
Yes.
Well, then today the stock market and crypto market is kind of together.
Yes.
As the high risk asset classes.
Yes.
And now with the macroeconomic, we know that all the money is going to the low risk asset classes.
Yes.
Like bonds and mortgages, stuff.
Money hasn't been going to low risk assets.
So what do you think money is going on about that?
Like, look, I can show you where the money's going. The last talk we did was about the liquidity and fluidity of money. So let's see, this is bonds. This is bond yields. If bond yields are going up, that means people are not buying bonds, which means money's not flowing into bonds. It's not actually flowing to super safe places, right? What the money's done is it's flowed into the dollar, which is a safe place for it to be. Between now and the end of the year, that amount of liquidity is going to flush out of the dollar and flood into these risky markets. Because the way markets crash is not when you know that they're going to crash, right? If you wake up and you go, I think the market's going to crash, and you turn on YouTube and YouTube goes, market's going to crash, and everybody goes, market's going to crash, and NBC's like, market's going to crash. That's not how markets crash. Otherwise, you could just put in a short saying, I bet that the market price goes down, it falls off of a cliff, and we all get rich, right? The way markets crash is they'll turn over and they'll convince you I'm going down. Everybody goes, oh my God, shit, it's going down. And you sell it and you exit, and then the liquidity runs in, runs the market up, euphoria returns to the market, everybody thinks we're all back to good times again, and then they fall off of a cliff, right? So yes, crypto's gonna crash. Yes, stocks are going to crash. I mean, housing is going to crash. Banks are going to crash. Food supplies are going to crash. Famines are going to hit. Wars are going to start. They're already starting across the world. Look at Sri Lanka. Look at Lebanon. Look at all the places that are already going down. But when that happens, you want to be in the US dollar. The only safe place you want to be in is the US dollar. But today, the US dollar is telling you you don't want to be in the US dollar between now and the end of the year. Right? So this is where there's like yes, it's going to crash, but it's not going to crash today. It's going to crash when nobody expects it to crash.
Just said you want to be in the US dollar, but at the same note, you also talk about bank bail-ins where banks are going to take all of the US dollar.
Yes.
So where do we put the US dollar on the mattress?
Not in a bank. You don't put it into a bank and you don't put it into UST. You put it into USDC.
And how do you get it out?
The new banks will come online. Like, banks are not going to die as a concept. The banking agreements that we've already done with banks are going to be fulfilled in the way where we said, yes, you can take my money from the bank when and if you go when you go bankrupt. On the other side, a new banking system is coming alive. A way better banking systems coming online by 2024, between 2024 to 2025, the entire world's banking system is going to be revolutionized. So on the other side, first of all, I don't need to go into the bank. I just take my money and I invest it into the market when the times are the worst, into the crypto markets, into digital markets. Or I just hold my cash myself and I wait for all this to happen. And then on the other side, a new banking system will come alive and I'll be able to off-ramp my crypto into that new banking system, or my stable coins into that new banking system. Yeah.
Do you recommend staking our coins, example, for instance, the ones we have on Exodus, while we are waiting for the parabolic run? And once we transfer into cold storage, can we still stake there?
Should you stake your coins? That depends on your strategy, right? Like, should you stake or should you not? It's a very individualized thing. If you understand the risks that you're taking with staking and you're doing it in a way where it's very accessible, I like that. Like, if I have an exchange, I'm holding coins on exchanges, and the exchange allows me to stake it, and it's one step away from me selling it, and it's on an exchange, so it doesn't go through a blockchain. I mean, staking technically still goes through a blockchain, but that's a risk I'm okay to take, but I don't. Because I've been in this space for too long for me to 2, 3, 5%, 10%, 20%, no thank you. Whatever game you're running to give me that 20%, no, give me my shit. I'll make my 20% while I sleep. One day when the thing just explodes and I make 2,000%, I don't want to risk it for 20% or 8% or 2% or something. That's old world thinking. They're like, oh, 8%, that means you'll double your wealth within 7 years. Yeah, but like crypto, you'll double your wealth in 30 seconds if you do it the right way, right? So I personally don't stake things because it requires for me to give my assets to somebody else to do something, and then that party becomes a risk. But if you're somebody who understands it and is comfortable taking that risk, take it. Can you stake it while it's in a hardware wallet? That's a good question. As far as I understand, staking, you need to give it to a platform and you need to put it into a platform to stake it. It doesn't happen in the wallet itself. If anything, the wallet's tied up to the transaction, so it comes back to the wallet when you're done staking. Right? But okay, we gone over. Thank you so much for your time, guys. Appreciate you all. See you guys next time. Oh yeah, if you're, thank you. If you're not in our Telegram groups, please come see Gozi and then we'll add you guys in there. We post all these recordings and stuff in there.
Okay.
All right.